All right, this is going to be a little bit of a different video from what you guys are used to. You guys are used to seeing car stuff on my channel, but luckily for you, if you clicked on this video, I'm going to show you how to hedge against inflation and beat the markets and get out of this dire situation we're in, as you can see from all the news lately. So I'm going to cover everything worldwide from a macroeconomic standpoint, and then we're going to get into some investment opportunities and some ways you can protect your money and hedge against inflation and potentially make money off of some of these situations that are going on. All right, so obviously to kick things off, as you guys can see on my screen, this is a map of Ukraine, and the red section is the section that has already been compromised by Russian forces, and this section here, is still occupied basically by the US and every other country because Ukraine can't handle anything military-wise, apparently, and every other country has to step in right now. So what does this mean? Well, we have Joe Biden announcing that we're going to be sending more wartime goods to Ukraine, and we've already sent close to $1 trillion to the country. Other countries are stepping in, such as Germany and such, saying that they're also investing in this quote-unquote war that's happening with Russia. So things are only escalating at this point and not de-escalating, and I could see pretty much all of 2023 being about the war in Ukraine and things only getting worse. So you see in this live map here, this is a kind of a cool map to see. It's liveuamap.com, and if you go to Ukraine here, you can actually see live events of this disgusting war that's going on basically over natural resources in Ukraine. Won't get into that political wise, that's a story for another time, but there is a financial opportunity that is brewing from this, and I'll show you some articles and such to back up this interesting finding I have. So we have a ton of private investment firms like BlackRock and a lot of military industrial complex companies investing in Ukraine, working with Zelensky. Zelensky is also working with the federal government and Biden, just funneling all kinds of money into this country. A lot of this is just a macroeconomic opportunity for some of these people to steal money, and it's unfortunate, but there's a way that we could also capitalize on some of this as well. Again, I don't see this war dying down anytime soon. No one is having peace talks, not a single country. I think Germany themselves have actually declared war essentially with Russia. So yeah, things are only escalating, and there's a lot of private companies betting on the fact that a major war is going to start, and these private companies make money off of lending Ukraine money and then Ukraine having to pay it back at the end of the war with tremendous interest rates. We're talking 15-20% sometimes on trillions of dollars. So it's a huge investment opportunity for companies like these. Coming from a 1,000-foot view, we're going to zoom in a little bit at the US economy and see what's going on there. As you guys are aware, inflation is quite high lately. Inflation is about at, I would say, 6 to 9%, and that's being conservative. I know a lot of these actual US bureaus like to pad the numbers to not scare people. This is Q3 of 2022, and even that's 4%. So crazy high inflation lately, and it's only getting worse. And there's articles like this from Goldman Sachs, a huge investment firm, saying that, oh, why the dollar might be past its peak. And you have the actual dollar index, which shows you the value of the dollar over time. And you can see kind of in the middle of last year, September, it was pretty much at its peak, highest we've ever seen. And then from there, just been declining, the value of the dollar. So it's probably gone down, I would say, at least 15% from its peak. So the dollar is getting weaker. Your buying power with your money is getting weaker. and the economy itself because of this. There's all kinds of layoffs. If you search for layoffs in the news, in the tech sector especially, you're seeing Intel and all these major corporations, Microsoft laying off tons and tons of workers. Just not the greatest economic climate. How do we allow our money to work for us instead of sitting in the bank and just devaluing? I mean, this is just not going to do anything for you. So you're going to look for investment opportunities. So one thing that's kind of interesting is the war in Ukraine. If a full-blown war breaks out, what are these countries going to need? They're going to need wartime goods. They're going to need raw materials like steel and everything to make tanks, bombs, guns, whatever, medical supplies, food rations for troops. So a lot of these companies that make those goods, you can sort of capitalize on. So they have these things called ETFs, and these are combined funds. That combine a whole bunch of different companies, and I won't get into the specific details of each one, but so this company or ticker symbol here held by BlackRock, of course, who's one person that's invested in Ukraine, like we saw before. This is one of their ETFs, so it's Aerospace and Defense ETF. So as you can see, it contains a whole bunch of industrial and consumer defense related stuff. They should show, yeah, so Raytheon, Lockheed Martin, Boeing, these make all those expensive aircrafts, and you can see this ETF fund here. ITA makes up the majority of that. So Northrop Group, I think they make guns and tanks. So as you can see here, just want to be investing in aerospace and defense related stuff if this Ukraine war gets any more complicated. So these are only going to go up. If I could show the chart here, chart is looking very, very good from an investment opportunity. Let's look at the last 3 months. So it's actually surpassed its prior high here, and it's just been sort of rocketing off from there. So definitely a solid investment opportunity. And again, I don't think this war is going to de-escalate anytime soon. There is another ETF that's similar called PPA. This is just another company that offers an ETF, and you can see their holdings. So again, we got industrials, again, Raytheon, Lockheed Martin, Boeing, all these companies that make wartime goods. All right, so that kind of covers the Ukraine war. If you want to buy some of these stocks individually, that's cool too, but a lot of these ETFs mainly cover a basket of these wartime sort of companies, military industrial complex. Okay, so if you want to just open up a sort of safe savings account right now and you're uncertain of these times and you just want to park your money and not have to worry about actually investing in an ETF or the stock market, there is another investment opportunity because the Federal Reserve keeps raising interest rates. And this applies to banks, and when the U.S. government borrows money, the Federal Reserve funding rates, so we're at 4.3%. So you can make that kind of money on your parked cash. So there's companies like Vanguard here that has a federal money market fund, which is made up of treasury bonds and such, but it offers a rate of 4.3% return per year, and I think it pays out monthly, which is nice. So if you have a bunch of cash that's just parked and you want to earn quite a bit more interest than a normal savings account would, you would go with something like this. Because a traditional savings account, you're only making like 0.202% or 0.2% a lot of times, and it's just absolutely dismal. So again, their Vanguard is ranking this as a very, very low risk because you're just essentially buying treasury bonds and those are government IOUs. You're basically lending the government money and they have to pay you back, obviously. And 99.99% of the time, unless something really bad happens, the government is obviously going to pay you back, and they're going to pay you back at this interest rate. So that's how you make the 4.3%. Now, this last topic, we're going to sort of get into the unknown speculation slash conspiracy side of things. And my thought is that there's a lot of headlines out there saying that, the US economy is going to crash, the global economy is going to crash, especially with World War III brewing with Russia. And this is a perfect opportunity to introduce a digital dollar that they're talking about. So essentially, there's going to be no more physical Federal Reserve notes, no more dollars. Everyone's going to have a digital bank account. It's going to be 100% controlled by the federal government. And they're going to say, just like the dollar, quote unquote, it's backed by gold. And everyone should just trust this digital dollar because, the original dollar, paper dollar, is no good anymore. So that's, I think, where we're heading. There's a lot of articles, especially China, saying that there's this Chinese digital currency that's going to be backed by gold. They have 20,000 tons of gold, all this nonsense. And then their gold, each country's gold reserve. I highly doubt the US has that much reserve gold. But China's been buying up gold, and I think that's eventually going to turn into their digital currency, essentially. So how do we fix this? Because you're going to have to turn your normal dollars into this digital currency, whatever the US decides to go with, whatever technology. And this is not cryptocurrency. So keep in mind, this is absolutely not cryptocurrency. This is the 100% controlled by the government. This is not decentralized like Bitcoin or Tether or anything like that. This is the Fed has complete control over this, and it's basically like the US dollar in digital form. They can take your bank account whenever they want. It's essentially to allow them to have more control over you, essentially. It's all about control. So what can you do? Gold and silver right now are still at fairly low prices, surprisingly. Let me look at this all-time chart. So this actually goes back to 94. I would have liked to see the Great Depression spike on this gold chart here. But if we're looking here, again, I think we're going to break all-time highs for gold soonish. I think we're at almost 2,000 the last time. So probably a good time to get in on gold. I don't see that going down anytime, especially with inflation at 9%. And then silver, the all-time chart here. Silver at one point went up to $44 in 2011. And we had the 2008 economic crash as a spike here. So every economic crash we've seen silver go up. So especially with this Ukraine war, I could see that going even higher. So potentially double your money on silver if it goes back to 40. It's at about 20-ish right now. I wouldn't do any of these platinum or anything like that. Platinum is they use it in catalytic converters. That's actually on the downside. But yeah, gold and silver are pretty solid right now. So coming to Bitcoin and cryptocurrency, Bitcoin is sort of the leader in cryptocurrencies. So you always want to keep track of Bitcoin first before you start investing in some of the other quote unquote shit coins. But essentially we need to break this $25,000 level before we can start getting up higher again. We did see a little bit of a spike this year, but this main drop here was because of the whole FTX debacle, and we've kind of since did a little U-shaped recovery and kind of coming back from there. My thoughts are we are going to, because of the overall economic climate, we're going to climb back to probably 25,000 and everyone's going to say, ooh, Bitcoin is back. And then it's probably going to end up crashing back down to the, if you come back here, this is a level of support 13 to essentially I would say like $8,000 to $10,000 level. So personally, I actually have a bunch of buy orders set at the $10,000 to $12,000 range. So if it comes crashing back down, I'll be able to catch that. So me personally, I'm sitting in mostly cash right now, and a lot of it's in this money market fund, just collecting this 4.3%. I have a little bit of allocation for aerospace and defense ETFs like I was talking about, and then I do have some physical gold and silver, and then again I have my Bitcoin buy orders set between about like $13,000 and $10,000 range to catch that when it crashes. But we all need to keep an eye on this macroeconomic situation, the massive layoffs, the massive job cuts, and yeah, I don't see this suddenly recovering. A lot of people are saying, oh, invest in Bitcoin, invest in the stock market, but I mean, article after article, and the value of the dollar, just everything all at once, everything that I covered, just not the greatest economic situation for investing in the old S&P 500 and just watching that grow. I know it's been like that for a couple years, but everything can't go up forever. And I think the powers that be have a different plan in mind to crash everything and implement their world digital currency. So just keep that in mind and stay safe out there. And again, safest bet is just to park some cash in here, but there are definitely some investment opportunities out there. So let me know if you guys have any questions. Again, I know I mainly cover car stuff, but this might be informational for you, and let me know if you have any other investments you would like me to look at or any other questions you guys have. Thanks for watching.